Hey guys, thanks a lot for watching my next video. Here's the sheet I'm using for my notes so I know what to talk about next. Okay, over the last few weeks, I realized I was overanalyzing and doing too much trading. I was looking at too many indicators, I had too many indicators on the screen, and it was really locking me up, and I really didn't like taking loss, which in a sense prevented me from taking more profit. So now I'm just going to plow ahead, simplify things, and just go from there. So I'm going to show you what I'm going to be doing. Okay, right here on XLF, I'm going to be trading, let me get that out, I'm going to be trading XLF, and I'm just going to be following, come on, get up there. I'm simply going to be following the red and the green line, and that's it. I'm going to follow the red and the green line. Arrows, going to ignore those, going to ignore everything else. I'm not really going to pay attention to down here or down here. I'm going to leave these indicators up because I'm going to use them at a later time, because this is a pretty great trading indicator suite I got going here. But for now, when you see this control line, when it's green, I'm in calls. When it's red, I'm in puts, and I'm just going to go forever. Now that's all I'm doing. These arrows, by the way, was Thursday and Friday. I'm just ignoring that right now. It's going to do overnight systems where I like jump and try to trade options on the gap. Not doing that right now either. So right here, I got in, I sold my, so here it's red. I sold, also by the way, when the tracers are flat, I tend not to be in it, okay? Because that's when it's not doing much. It's just going sideways. When I have a flat tracer, I get out and I wait. And I wait for a new one that's a little flat, and then as soon as it changes, I get in. But other than that, it's just red, puts, okay? When it turns green, I sell the puts, I buy calls, okay? Then, well, right here was flat, so all of a sudden I sold and I did nothing and I waited. Turned red, but still flat, did nothing, I waited. And then looks like it started to move here a little bit, about right here. And I bought puts. And it's going down, and when it turns green or flattens, I'll sell them. And that's it, just red and green on XLF, okay? Pretty simple. I'm using the 1 hour, okay? XLF, red and green. It kind of reminds me of an early indicator suite that came out on the market in the late aughts, where it was that simple, just green and red, and so that's what I'm going to be following with this. Okay, so I'm going to have that window open while I'm sitting here at the computer at work, and then another thing I'm going to do is SPY. Now, SPY has some great options that are 22 strikes out. There's a huge secondary market. I'd like to show you that, but I don't want to run out of tape. Basically, just go to Yahoo Finance, type in SPY, and then pick a week of options. Pick early July, whatever, and look at them. Look at all the calls and puts. Look at them. It's so populated. It's a very popular liquid ETF fund. And again, the options are really active. 22 strikes out, and they're nicely priced, like $1 or $2. And that's what I'm going to be focusing on here with this. So now on this window, I have the God mode and I have the CM slingshot. Just those two indicators on that one. You've seen screenshots of that. I'm simply following the God mode. Okay. When it gets above 70, I buy it, or I sell it. I'm sorry, above 70, I sell it. And when it gets below 29, I buy it. And it just cycles back and forth. And that way I could ignore the CM slingshot indicator above it, and I just play straight God mode, and it's pretty good. And there's a couple exceptions to this. So right here you can see it's at the bottom and you buy, and it's at the top, you sell. Okay, now here all of a sudden it fails to go down below 29, and that tells me there's going to be an extended run in the positive direction. So right there I just immediately buy long, and I just hold and I wait. I wait till I see the God mode start to fall off, and then I sell, okay? And then, as soon as it hits the bottom again, it's corrected. It's done with that mode, and I buy in again. And it comes up here, didn't quite hit the 70 yet. So what that tells me is there's going to be a downward trend. And then right away, I buy puts for the long term, and I just sort of sit on them. And I wait. Now again, when I say long term, you don't want to be in any, with the SPY system, you're only using 2 week out options, okay? And you don't want to do any longer because it's going to be too expensive and it won't move as fast. But 2 week out long options is appropriate. 1 week out options, even though it's cheaper, won't move fast enough. Now you might say, Mark, how do I know that these options, because they're 22 places out of the money, 22 strikes out of the money, that they're not going to erode and do weird stuff? Well, I looked that up. And the way I looked that up is I went to this site called Big Charts. Okay, so right here, I'm going to type in SPY. I'm going to show you how to, whoops, I'm going to show you how to get in here. Okay, so, and then you hit basic chart for SPY. Okay, come on. And then you go down here to options chain. So I'm clicking, go to options chain, click on that. Come on. Okay, and all the options are here. Okay, and then let's say I want to look at July. I hit hide. Here's what month. Here's how you get to the month. You have to hide the current month. It'll say whatever current month is. Since it's still June, it says hide June. You click that, and then it expands to all the different months. Let's say I want to see July or whatever. So since I only do 2 week out, I want to hit the July options. Okay. So come on. Yeah, I'm on computer. There we go. And you can see over here it has the dates. So this block and this block is the first. This is the second. This block and this block. And then the 2 blocks are both calls and puts. Let's say I want to go to the 8th. Okay, now I'm looking at them. And here is the current price right here. Now you can look at what kind of action has this option had. For example, let's say you want to go 21 out of the money. 1, 2, 3, 4, 5, 22. 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22 out of the money. You hit quote. Okay? So you hit that. Now this is going to show you what kind of action that this option has been undergoing. Now you can see this is the 1 year chart. But let's look at the actions had for the last, say, 10 days. Alright? Alright, now it's going to update. And you can see that this option has been all over the place. It's been going, cycling, not really eroding. If it was eroding, it would start high over here and just quickly come down. But it really hasn't been eroding. It's been pretty constant around this zone. I mean, erosion it's real high in price and just comes down almost nothing. That kind of line is erosion. But this thing isn't really eroding too badly. It's coming straight off across, and it's cycling back and forth by about 50 to 200%, which is nice. You can make some nice gains using that. Let's look at another example. Here's an option that's about to expire next week. Okay, and once again, it's been all over the place. And this is when right here, this is a put, right? This is when that big drop happened about the 11th, 12th, and 13th of this month, and then it came back down and once again, it's not a straight line down. It's a nicely spaced price action, and you could see that you would have made some decent money using that. Okay, next point. All right, so again, you're going to be taking about 22 strikes out. Nice cheap out there, anywhere from $1 or $2. Let's see. Okay, so you're good. There's no erosion on there. Now, what about money? How much should you purchase or bet? My advice is this. Divide your total money that you have for trading into 20 piles. Keep a trade journal. What went right, what went wrong. You want to divide it into 20 piles. Say you have like 4G, and you just gamble 1G. Well, that's 25% of your total pile, and you're learning here, okay? You can't afford to just take 25% of your entire pile. I've had times where I've lost 5 or 6 trades in a row. You can't do that. You got to have a bigger pile so you can keep reloading your gun until you get it and until you learn. About 20 piles is appropriate. You're probably going to have to keep your day job for a while you're learning. This is a learning process, okay? If you want to learn, I mean, trading seems simple on hindsight looking at a chart, but it's not easy under live fire. If you want to learn how to trade, if you want to learn how to scalp, you're going to have replacement bullets ready, okay? You just can't stop and give up because you just burned through all your cash, all right? So you could divide it into 20 piles, keep a journal, or you could start with a minimum amount, like 1 contract, and see how many times you could double it. If you eventually lose, well, you were playing with house money, not your own. You just lost your original bet. It's really how safe you want to play it. So don't overextend yourself, guys. Just basically that's what I'm doing right now. XLF and SPY. I'm not doing the system where I'm trying to scalp like overnights on Thursday and Friday anymore. I put that on hold. I'm just back to basics, just XLF and SPY. If you guys have any questions, get back to me, leave a comment under this video, and thanks for watching.